Welcome, guys, to the second part of liquidity of the last course you'll ever need. My voice is still fucked up, and I'm also joined here with one VIP student, Max. He'll be asking questions in between for you guys, maybe something he won't understand. Today, we're gonna talk about internal range liquidity. It's gonna be a short video, maybe around 10-ish minutes. So, guys, enjoy, grab your notebook, write shit down, gotta get to the goodies, you gotta write it down, you gotta backtest it yourself. I ain't chewing your food before you feel me? All right, let's hop into it. But before we hopping into it, I'm gonna show you a video of our new sponsor.
Guys, today I'm gonna talk about our daily sponsor or a sponsor for a lifetime, Trader Subs. It's a supplement for traders and people that love to go to the gym. It's all natural, which I advocate because I only like natural things. As you can see here, I'm buying my bullish brain. It's my favorite one. You can use the code Tradecademy, 20% off for you guys. We don't gain anything of it. We are giving back to the community. You can use PayPal, Google Pay, credit card. It's from the US, but they ship to EU as well. It's probably the best supplements I've came across since a long time. And I'll see you guys in the video.
Okay, guys, I'm gonna take some trade supplements right now and let's hop into the video. All right, guys, as you can see, we're going to talk about internal range liquidity. What is internal range liquidity? I'm going to explain you guys today. As you guys know, market moves in pullbacks. I keep saying this every fucking video, but it's the truth, right? So let's say we're going to go bearish. We break lows, we break lows, we break lows. And we build up liquidity here, right? And this is our low and high, which means this is our range. You get me? It's not that hard now. Come on. So you want to sell high in the area around your institutional zone, right? So what do we do? What do we look for? Since we have our zone right here, we're going to mark out the liquidity. Like I told you guys, right here, we got trend line liquidity. But this liquidity is not interesting for us because we know market's going to go up anyways. So what do we mark? This is internal range liquidity. And what does it exactly mean? It's the last high or last low or like the last bit of liquidity within the range. So let's mark this out. So let's say this is the range from this low right here to here. That's our range. Where is the last high besides this one? Because this high is a protected high, yeah? We talked about it in structure. This is the protected high. So this is our last bit of liquidity before market's probably going to drop. So when market is building up to fall again, we're taking out these highs and these highs, right? Going up, going up, going up. Markets tend to grab the last bit of liquidity and come back in your zone and drop. So that's exactly what we do with internal range liquidity. We base our entries off the internal range liquidity. And this is the exact same thing with bullish. And I'm going to show you guys now with a bearish, what is it called?
Market structure.
Yeah, structure. Thanks, Max. So right here, you can see market is going bearish, right? This is a little bit unclear. So that's why I took this one. Because as you can see, this is the last high before this protected high. So this is the internal range of liquidity. And as you can see, right when we come back within this area, so around this area, especially the golden area, market pushes up, takes out this liquidity and falls, right? Just because we took out the last little bit of internal range liquidity. And it's not only with high range, like it's also with smaller ranges. So let's say if we find something here, for example, you can see here, we have a high, right? A high, a new high, and a low. So we break the low, and now we have our range. You guys agree? Well, you have no choice because I'm right. Here is the last high, or you could take this one, but it's whatever, same shit. This is your internal range liquidity. The last bit of liquidity within the range and without breaking your protected high. And why is this important? Because if we took out the protected high, which means market's probably gonna go up again, right? Right? Another one.
I got a question, Aurelio.
Yeah.
So you know how you said that the second highs that you marked out, I see another high before
This
that.
one. Yeah.
Like the high before that one, the one that you're pointing at right
Mhm.
now, isn't that supposed to be the high we're taking out, or why not?
That could be, but the thing is, since this high, the low of this high didn't cause this low to be broken, it's still
Okay,
the same area, right?
yeah,
This low
makes
took out this low, which means that now it's interesting
that's a
here.
new valid high.
Yeah, that's a new valid high. This is just
Okay,
whatever. Mark just creating liquidity. We came back in this tiny demand zone right here. On the 15 ticks, this is interesting. But for us right now, it's not really.
okay,
Once again, here, you have a high, a low, a high, a low. We broke the low, and people would enter here, right? Why do you guys
yeah,
get taken out? Because this is internal range liquidity. This high is not strong. It's a weak high. It becomes liquidity for us. This high is strong. This high took out this high. We have a beautiful candle here. We swept. You can see it's a sweep. We come back. We go up. We create another high. And as you can see, it's at around the same area as this one. So here we actually got a little bit of double internal range liquidity. We drop. Market builds up liquidity here and here. We push up, we take it. People enter, put their stop loss here. But you're just becoming liquidity for us. Why? Because it's internal range. We just shoot up and we sweep it and we drop again. So I want to find some more clear examples for you guys. I got a beautiful one right here, and this is a buy. This is our low on higher time frame. This is our low. On high time frame markets, all market did was a tiny pullback, right? But do you see that we take out this low, we take out this low, but we're respecting this one because high time frame was at that point, I believe, bullish or something. Mm, kind of. But for now, let's say you can base your entry off of this. Why? We respect this one, you can see, but we do take out all of these, and this is once again within the area you want to take your trade. Do we have a zone here? Yes, we do. We have a zone right here. So it's taking out the liquidity and we're respecting our zone and we shoot up and you could, I don't know, you take it maybe on like something like here, let's say. You could have had your 3R high and you just target the first high point of liquidity. It's really that simple. I have a beautiful one on US30 I took myself right here. On my broker, unlike I know the other ones, if we go to the US30 I use, right here, guys, you can see we have our high and our low. What's happening right here? This is all liquidity. This is your last valid high or like strong high for liquidity, but we're building up a fuck ton of liquidity right here, as you can see, right? So what does market do? Market tricks people that we're gonna sell here by making strong lows or strong lows like triple bottom, but people think they're strong lows and they didn't break this high. So people are like, okay, I'm a sell, I'm a sell, I'm a sell. What do? They push market up to take out the stop losses of these people and then drop down to take the liquidity. And you can see in the Discord, I actually took an entry right here and my take profit was at the triple lows and I got a nice clean 4RR. So that's what market's doing constantly. And it's really easy to spot. Do we have another example real quick? Maybe if we go to the Euro USD, as you can see right here, guys, we have our low and our high. And within this area, we made a lot of liquidity and we built liquidity right here. This is our last kind of low. So this is the last internal range liquidity. Because if we do this once again, well, we're around the area. It's at least below the 50. But when we sweep internal range liquidity, you can take it and you can see we have a big ass reaction off of it. Just purely based on that liquidity sweep plus your demand zone right here. And we barely touch it. You could take this one or this one, 5 minutes probably around this area, or you could even take this one. It's around this area. So liquidity, internal range liquidity, how do you spot it? For bearish, it's always the last high after the protected high, right? And then we got your internal range liquidity. So this is basically what it looks like. And for bullish, it's the last low after the protected low. So here you got your protected low, and here you got your internal range liquidity. So guys, if you go to the charts, or this is external, I mean internal. If you go to the charts and you just try to find those things the whole time, because it's really easy to spot. Even with the small high, you can see less strong low gets taken out, we go up. Here you got another one, this low gets taken out, we go up. Right, it's really easy to spot if you focus on it. And I can see beautiful entries here for the VIP, but we're not gonna talk about that right now. Once again, a beautiful entry here for VIP. Why did no one take this? This is beautiful. But yeah,
I have no idea.
you can just spot it. There was an oopsies. I don't know when was it, 9 December. I don't even remember taking this trade, but it's whatever. Once again, you can see here low, high, internal range liquidity. We sweep and we shoot up like crazy. And it just happens over and over and over and over again. And that's where you want to look within the range to get an entry. And it's really easy to spot. Just keep in mind, just keep these two pictures in mind. So thank you guys for watching. Don't forget to subscribe. It's a short video. It's a little bit short explanation, but it's really easy. Just go on the charts, try it out for yourself, send in the Discord chat, hey, is this good, blah, blah, blah. We'll always react, and have a nice day.